And we're back. I'm DNA High Easton, and you're watching In Plain Legal on Now Media Television. Let's continue breaking down the law together. Welcome back to In Plain Legal. Want more of what you're watching? Stay connected to In Plain Legal and every Now Media TV favorite, live or on demand, anytime you like. Download the free Now Media TV app on Roku or iOS and unlock nonstop bilingual programming in English and Spanish. On the move, you can also catch the podcast version right from our website at www.nowmedia.tv. From business and news to lifestyle, culture, and beyond, Now Media TV is streaming around the clock, ready whenever you are. Welcome back. I'm here with Olga Hurtado, and in this segment, we're focusing on the financial side of franchises. Many business owners step into franchise opportunities without realizing the hidden costs, and that lack of clarity can quickly eat away at profits. Franchise owners face hidden fees and obligations they didn't anticipate, leading to financial strain. Olga, what makes franchise accounting so different and sometimes more complicated than running an independent small business?
Well, in our experience, it gets complicated because you are managing two layers, okay? You're managing your own business, but you're also managing the franchisor's requirements. So you have royalties, you have, like the national marketing fees, you have brand standards, and every franchise system tracks revenues differently. So if you make a mistake in one of these reportings, that can affect your compliance. So that's why it gets a little bit tricky, that part.
That makes a lot of sense. And this is why it's so good to make sure you talk with a tax professional, because us lawyers, we know the legal side of things. But it's always important to make sure that your taxes are being taken care of. So what financial surprises do new franchise owners often face that they wish they had known about before signing the contract?
Well, there are so many, but I think the ones that they don't realize that it's how many fees are tied to a contract. Okay, for instance, POS, the point of sale. Sometimes it gets tricky because it charges a lot of fees. Also, there are marketing fees and training fees. So I think that the ideal part of having a good financial strategy when you come to buy a franchise is that you don't underestimate those fees. Like you go to your research, okay, and make a list of all these surprising fees that any franchise owner can find, so you can have a better expectation of what's going to happen in your financials when your franchise it starts, like actively, like it's already on. So the bad news about the fees is that they're gonna eat up your cash flow quickly. The good news is that if you build a budget with an expectation or a more likely reality of what's gonna happen, then you're gonna be prepared.
So with that being said, I mean, it's good to make sure that you kind of have a team rallying behind you so that you're aware of what these possible fees can look like. So would you encourage franchise owners to seek an attorney and then speak with someone like you before, obviously once the contract is being made, or before they even speak with an attorney? I mean, I guess I'm kind of looking for timeline wise, when should they seek an attorney and when should they be able to speak with you before they know and are aware of these possible fees?
Well, if I were a franchise owner, to be honest, I will talk to another franchise owner, okay, and ask them about their experience. Like, if you go online and you you check your reviews for any restaurant you're going to, or if you're gonna buy a software, then you do your research, and you read the reviews. So do the same. Do the due diligence for your franchise acquisition. Ask other franchise owners from the same franchise chain and ask them, okay, what are the fees that we're hitting when you sign the contract? Not because the franchisor, hit those fees for you, but that they didn't consider those because it's supposed to be like operational expenses. So that way it can give them like clarity on how they can budget for those fees. But that will be my piece of advice. If I were them, I will go to another franchise owner and I will ask them.
That's good. That's good. It's always good to have those conversations with other people because then you can kind of bounce those ideas and figure out what you want to do once you have an informed decision. So, let's kind of segue a little bit. How can proper bookkeeping prevent disputes or misunderstandings with the franchisor?
Well, because if you have a bookkeeping, you have clean records to protect you, to show you the reality. So if you have a difference between whatever is in your bookkeeping and whatever you are reporting to the franchisor, that's going to be a mess because the franchisor is going to come back to you and I'm going to tell you, listen, your numbers are not correct. You underpay me my royalty fees. So that might become a more an issue with the franchisor. And also if there is some miscommunication or inconsistent reporting, they might actually do something against you if you keep doing that. So piece of advice: hire an accounting firm that you can outsource the bookkeeping or hire an internal bookkeeper, but keep the record straight because that will penalize you with the franchisor.
Okay. That's good. That's good. We're scaring our viewers in the best way possible, right? Because I mean, they have to make sure that they have the proper bookkeeping because if you then get into a dispute, then you're going to have to contact an attorney to be able to fight all of the problems, and we want to avoid that at all costs. So,
Definitely.
what strategies help franchise owners protect their profits while still meeting all the financial obligations required by the franchise?
Budgets. Create clear budgets and separate the funds for royalties, for marketing, for operations. And if you're a franchise owner, review your P&Ls monthly because at the end of the day, you make a huge investment in that franchise. There is no cheap franchise, okay? It comes along with a lot of investments from the franchisee. So just don't throw it into the garbage. Do your due diligence with your P&Ls. Question everything that doesn't make sense to you and compare the budgets with your P&L. Just an example, we have a franchise owner that he's so sharp with his budgets that when you review the variance between actuals versus budgets, you'll see like the difference is like 0.2%, something like that. That's a person who knows their numbers, okay? So that's your goal. If you have a budget and you create it very clear with your P&L and you review it on a monthly basis, you are not going to be in a bad position with your franchisor.
And for people who don't know, can you just briefly describe what a P&L is?
The P&L is the profit and loss statement. It's basically your income statement. It shows your revenues, your costs, and everything that it's expenses. So basically, it's the operations of your business. How much you sold, how much it cost you, and all the expenses that are tied to that business cycle.
Thank you
And
so much.
at the end of the day, the bottom line is your net income. Whatever you made as a total income that's gonna be your tax liability if you are a corporation or if you're an LLC or an S corp is gonna flow to your personal taxes.
Thank you. And so, beyond just sales numbers, what financial reports or indicators really show whether a franchise is truly successful?
Cash flow. You gotta measure your cash flow. You can have a beautiful net income, DNA. You can have like $150,000 net income, and you can have $0 in your bank account. And I've seen that. Okay, you can even have high sales and still lose money because you're not tracking your expenses correctly. So make sure that you track all the KPIs, all the ratios that are there for franchise owners, because sales are not the only measure that you can have for your business. If you don't have enough money to cover next week's expenses, then your business is not doing very well, even though your P&L or your profit and loss statement is showing that you have a big chunk of net income. So make sure that your profitability and whatever you're distributing yourself, as the money left in the bank account is consistent. Like, you cannot take all the money that is in the bank account and make it a day without considering what is going to happen next week. What if next week another pandemic arises? What is going to happen with your cash flow? So it is extremely important that besides sales, you measure your cash flow consistently.
That is so insightful, and I just have to say thank you for sharing all that information. So Olga, for franchise owners watching today who want more guidance, where can they connect with you and your firm, NeatBooks?
Well, we have a website and neatbooksllc.com. And we also have we have a button right there that you can contact us for more information. Also, we have an email address, which is customersuccess@neatbooksllc.com, that you can write us with any question you may have, or if you want to work with us, you're more than welcome to do so. And if you can also connect with me on LinkedIn.
Thank you very much. Well, up next, we're tackling a silent but deadly threat to business success: fraud inside your company. Stay with us. We'll be right back with clear explanations, practical advice, and the legal insights you need without the jargon. This is In Plain Legal on Now Media Television.